We are actually getting poorer, and it's getting harder and harder for people. The rich-poor divide is getting bigger and bigger. I started dividing all asset prices by global liquidity to try and see which ones were outperforming this debasement, this 11% hurdle rate. We only get 2 assets in the world that really do it significantly. What we found is there was one supermassive black hole that really helped us enormously, and it happened to be Bitcoin.
The financial system is in shambles, and according to Raoul Pal, we're all getting poorer, whether we recognize it or not. With currency debasement, mounting debt, and ongoing financial repression, the gap between the wealthy elite and everyone else continues to expand.
Just to show why it matters, this is the banana zone. I posted this on Twitter. Global M2, 10-week lead over Bitcoin. Do you need...
The only assets that can outperform this collapsing system are Bitcoin and high-growth technology stocks. As institutional adoption picks up speed and liquidity cycles shift, we could be entering one of the most explosive periods in Bitcoin's history. If you care about Bitcoin, macro trends, and the future of finance, don't forget to like, comment, and subscribe. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts, and expert predictions. All of this is available free of charge. It only takes a moment to sign up, and you can always change your mind later. Now back over to Raoul Pal.
Background was global macros. I looked at the global economy, trying to understand how it moved, how it affected asset classes. And from the late 90s, when I was still at Goldman, I realized that we were in a debt supercycle. Now, that debt supercycle, at first we thought it might blow up in 2000, but it actually ended in 2008. And it was a spectacular collapse of the global financial system that was eventually stopped via printing of money, which was something we had not really seen in our lifetimes. Yes, central banks had created money supply issues, but never of the magnitude of direct intervention using the balance sheet of the central banks around the world. And what that did at that time was a bit of magic. Everything stopped falling in price. And none of us really understood it then. We thought, oh, well, they've just given us free money and interest rates are zero and everything's okay. But what they'd actually done was lowered the value of the currency itself, of fiat currency, and the dollar is the world's reserve currency. And it means that assets, or the collateral of the system to be more exact, had optically revalued in price because the denominator had gone down. So for those of you who think, what's he talking about? Think of something like the Venezuelan stock market. It goes up in a straight line because in reality, it's the Bolivar that goes down in value. So what we're seeing is the value of fiat currency going down. Most of us didn't quite understand what was going on back then. 2012 came and Mario Draghi had the whatever it takes moment. And that was yet another moment where the central banks around the world decided that what they need to do is not allow collateral to go bust or the system was going to go under. Okay, fine. The other thing that happened at that point is they kind of had a debt jubilee. They decided to bring all interest rates around the world of all the developed nations to zero. And that meant everyone had breathing space from which they didn't have to pay the interest payments. And that went on for about 10 years until about 2016 or so, and for some countries even longer. Now, at that period, asset prices started to rip. And people didn't understand it. They talked about it being because of zero interest rates. But the reality was something else had happened. What had happened was the central banks were undergoing a massive wave of financial repression, something we'd not seen since the 1940s after the World War II debt overhang, all the way through to the 1950s and all the way into the late 1960s. Financial repression is a system by which they essentially print money to pay the interest on the debt. They then try and run nominal GDP hotter than the interest payments. And what happens over time is you deflate away the debt. Okay, that all sounds well and good. What does it mean for anybody? What it means is you're all fucked. What it's doing is things like variable inputs like wages or business earnings are not correlated to the debasement of currency. People get confused between inflation and debasement. What debasement does is increase the price of assets. So you guys are all in Australia and you have an understanding of how ridiculous the housing market is. Your housing market is driven by two factors. One, the immigration rate, which has kept the Australian economy strong for a very long period of time. And two is the global debasement of currency. The global debasement of currency is happening at about 8% a year. And plus you've got about 3% global inflation. Your hurdle rates to your wealth is 11% a year. Now your wages aren't going up 11% a year, therefore you are getting poorer. And what we're finding is the cohort of younger people, particularly, have realized, unlike my generation, I could buy a property at 3 times earnings. That doesn't exist anymore. It's 10 times, and in Australia, it's even higher. And this is a function of how screwed our future is, because we can't buy assets. If you think of the ASX 200, it's more expensive than it's ever been in terms of kind of units that you can buy for your income. Again, it's the same problem with gold, and it's the same problem with, well, it's the phenomena that drive cryptocurrencies. And what this means is when assets get more expensive, we can afford less of them. What is an asset? An asset is future deferred consumption. You lock up money for a period of time, let's say for your pension, and in 30 years' time, you unlock it and you should have had gained wealth. You should have been compensated for locking it up for a long period of time. What's happening is you're not. It's the opposite. You're being financially repressed. So I started thinking about this at depth, thinking, okay, if this is the reality, whether we like it or not, that matters not. The reality is we are actually getting poorer, and it's getting harder and harder for people. The rich-poor divide is getting bigger and bigger. What can we do about it? And so I started doing crazy stuff like, and people still to this day think it's a bit weird, I started dividing all asset prices by global liquidity to try and see which ones were outperforming this debasement, this 11% hurdle rate. And what we only get 2 assets in the world that really do it significantly. One is technology. So technology stocks, because we're in a technology age, the exponential age. Those things outperform. Yeah, Jamie, you're sharing a table, I think, on the screen as well.
Yeah, that's right.
That shows some of this. The other one, and equities themselves did okay. Australia did relatively okay, again, because of the structure of your economy and the fact that you also were producing physical, commodities which had value in this world. But what we found is there was one supermassive black hole that really helped us enormously, and it happened to be Bitcoin, or cryptocurrency at large. But let's use Bitcoin. So Bitcoin actually is the fastest, best performing asset in all recorded history. As you can see by that table that Jamie's kindly put up, it is the most ridiculous performing asset we've ever had. And we have, I think it compounds at about 150% returns since 2012. That includes 3 70% plus drawdowns. So what we've got is kind of a super creature of investing. And what makes it so powerful is it's fractionizable and it's global. It's the first truly global homogeneous asset that everybody can access with a phone. Everybody can put 10% of their income in. You can't buy 10% of, real estate in Australia. You can't do it. Most people can't afford it, so the rich people can. Here we've got an asset that outperforms everything, that is basically tokenization of a technology, which is blockchain technology, that we can all participate in. And it is one of the great ways to unfuck all of our futures. And it moves so far and fast that it really makes a dramatic difference, even if you start with small amounts. So that's basically the backdrop of how I think about this. The exponential age was something I came across, and I wasn't the first person to think in these terms, but I kind of started putting it in a macro framework, which is that we are living in an age where a bunch of technologies that are completely game-changing are all hitting network adoption at the same time. So network adoption is when the networks start going exponential as new people use these technologies. Now, we've seen that in the past. We saw it with mobile phone technology. We saw it with the internet. We saw it with home computing. Stuff like this we've seen, but we've never seen a nexus of maybe 5 or 6 of the most important technologies of all time, all happening at the same time. So blockchain is one of them. It's a foundational layer. It's the truth layer to the internet. We can come back to all of this later. But AI is the big one. AI gets around a fundamental human issue, which is knowledge is scarce and is priced accordingly.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.